Has Powell gotten his mojo back?
Well, that's what Jeffrey said. He said that he finally got his credibility after removing the forward guidance and saying that they're going to be data dependent going into each and every meeting and making the decisions once they get to the meetings.
Do you agree?
Well, I think that it is a good thing because it means that the market can take cues about the real data instead of some projected data, for example. So we're going to be having to watch labor data like a hawk now, as well as the CPI data like a hawk. And then that can be more of a determinant of what the Fed will do.
I tell you, I mean, speaking of what they will do, Jeffrey thinks we're close to the end. You agree with him on that? Because he was pretty positive on the stock market and returns going forward, too.
Yeah, and
more so than you have been.
Yeah, definitely. Well, so we have been thinking that we could see more volatility because we thought that the Fed certainly wasn't in a position to pivot. Now, was today's meeting a pivot? We don't think so. Now, the Fed said that they think they've gotten to neutral, and that would be in line with the Fed dot plot at 2.5%. That's neutral. And then what really got the market going was them saying that they'll pause once they go a little bit beyond neutral and reconsider. So if we get another 75 basis points in September, that gets us to 325. And then do we see them pause and see how things shake out and happen?
Maybe you go 50, though, in September, and you get to 3, as Mr. Gundlach suggested that was his call there. And I think that's where the market is sort of heading. Whether it's ahead of itself or not is the $64 trillion question, or whatever you want to put it. But that's where it seems to be.
But we can't forget that this is still highly dependent on inflation data and highly dependent on inflation expectations, which themselves are dependent on gasoline prices. We go back to that June meeting, the Fed was talking all about inflation expectations and the worry that they become anchored. But the reason that they fell in July is because gasoline prices fell. If we see them climb again, then we're in a scenario where we could be starting to talk about more risks on that front.
Lastly, and quickly, earnings not as bad as feared. Is that the headline you take away?
Yeah, I think that it's not as bad as feared, as well as the fact that even when we've had good news, the market's been really eager to pick out a couple of positive points and see stocks rally. So clearly positioning got very short going into this Fed meeting, going into earnings. Valuations had gotten lower. So it is a relief rally. Doesn't necessarily mean we're out of the woods for this broader correction.
Great having you here. I appreciate your understanding. Our time is pinched. It's been a very busy hour. That's Cameron Dawson joining us here from NewEdge.